Hi, welcome to this presentation. My name is Lee, and in today's video, I will be presenting to you my investment proposition on 29Metals. And in today's video, I will be covering 5 of the key agendas, ranging from the company's overview, the growth prospect of the company, the valuation of 29Metals, the risk factor that the company is going to face in the next decade. And when we compile all of the information together, I will suggest to you whether you should invest into the company or not from the conclusion. But first, I will start off talking about the company's overview. So, 29Metals is actually a small cap copper mining company in Australia. It is headquartered in Melbourne with 2 of its long-lived assets, the Golden Grove mine and the Capricorn copper mine in Western Australia and in Queensland, respectively. The company also have a tenement project in Chile, but it is still undergoing further studies and evaluation to figure out whether it is feasible for the company to start producing copper in that region. Before we know 29Metals as it is today, it was EMR Capital, which is a private equity firm specializing in mining that holds all of 29Metals assets together and before it formed an entity called 29Metals. The private equity firm decided to make an exit by consolidating all of the assets together to form 29Metals through an IPO, raising approximately $528 million in 2021. Looking at this, slide, we can see that 29Metals have its current existing mine, the Golden Grove mine and the Capricorn copper mine in Western Australia and in Queensland, have more than 10 years of mine life and have significant amount of ore reserves within those mines. We also can see that the tenement project in Chile is quite promising also, showing quite a substantial amount of mineral resources within that region. Financially, the company has been quite productive in terms of generating its revenue over 2021. The company has generated approximately 600 million revenues in 2021, 177 EBITDA, which translate to a 25% EBITDA margin in 2021. As of late, the company has a $1.3 billion market capitalization, and also it produces approximately 68,000 copper equivalent tons of commodities in 2021. And if we just isolate the copper production alone in 2021, we can see that 29Metals is actually the 6th largest copper producer in Australia, which is a very promising sign for the company moving forward into the future as it continues to improve its copper production and can try to compete with Sandfire Resources and OZ Mineral to take their place as the 5th or 4th largest copper producer in Australia. Now let us just take a look at the growth prospect of the company. So in this section, I will be taking a top-down approach to see whether 29Metals fits globally or fits generally on the global trend on the commodities market moving forward into the next decade. We know for a fact that the geopolitical risk coming from Russia and Ukraine, and also the supply chain disruption coming from the COVID-19, especially like the lockdown in Shanghai, is affecting the commodity prices over it's globally actually. And so early in 2022, we can see that the S&P Goldman Sachs Commodities Index, which is a proxy for commodities market, starting to converge against the S&P 500, which shows that, the mining company and also the commodity markets are actually outperforming the broader market as a whole in 2022, which is a good sign for 29Metals because it can capitalize on this benefit from the copper price increases because of the commodity pricing, the commodity market increasing overall in this current juncture, and hence help push up the top line revenue for 29Metals. Looking specifically at the copper industry as a whole, we can see that the industry itself has been suffering copper deficit over the past decade. And if we look specifically at 2020 and 21, we can see that again it suffers approximately 3 to 4 million tons of copper deficit over that period, and it is not expected to recover from this deficit moving forward into the next decade, as suggested by some of the key people in the copper organization globally. Looking at the copper demand from different industries as a whole, we know for a fact that the adoption of renewable energy and also the sustainable energy is going to help increase the copper demand moving forward into the next decade. And we know, some of the key sustainable industries, renewable industries like, solar power, wind power, and also hydropower, which requires copper for the infrastructure, is going to increase the demand for copper over the next decade. And it is a good sign for 29Metals as a whole because, the demand will not slow down moving forward into the next decade, which can ensure that 29Metals does not suffer any issue from the demand side. And looking at the numbers, we can see that if the world take a sustainable path on increasing its adoption on renewable energies, the renewable industries is going to capture approximately more than 50% of the copper demand in 2030. And that is not accounting for the existing industries that requires copper for their infrastructure. And that is also going to increase in the next decade. And the deficit will stay persistently high. The deficit will increase overall in the future, which will help push the copper price higher in the future because of the supply and demand mismatch, and hence again it benefits 29Metals as a whole because of copper price increasing, higher top line revenue for the company. Looking at 29Metals growth pipeline as an entity itself, we can see that the company has been trying very hard in increasing its copper production over this year and also in the next 3 to 5 years because of the studies coming from the tenement project in Chile. And we know for a fact that demand is not the issue right now. It is whether 29Metals can continue to improve its copper production moving forward into the next decade to capitalize on the copper deficit as a whole and help push higher its top line revenue in the future. So the demand side, I am not afraid of it. It is whether the company can continue to improve its copper production over the next decade. And we can see that, the company has provided guidance in 2022. It is expected that 29Metals is going to increase its copper production by 5 kilotons in 2022. Although it's a substantial increase, but I would love to see, the company continue to increase its copper production, and whether the tenement project in Chile can come online, which will help push its copper production significantly over the next 3 to 5 years. And this is a very promising sign for the company. Since we've talked about the company as a whole and also the growth prospect of the company, let's put everything into the numbers and to see where the intrinsic value lies for the company. So from my estimate, my valuation shows that the company is actually valued at $4.65 per share relative to the current share price at $2.85 per share, which is a 63% upside benefit if you start investing right now. My methodology and from my valuation, I've adopted forward-looking statement or forward-looking estimate, which puts more weight on those valuation because it accounts for the growth pipeline and also the growth opportunities that the company can achieve, and also some of the backward-looking valuation, like comparable multiples, to show, hey, where is 29Metals standing relative to its peers. But overall, we can see that the company is actually undervalued at $4.65 per share. We know for a fact that strong demand coming from the copper industry, and also 29Metals have a very strong growth pipeline, and overall the company is undervalued. But we should also point out some of the risk factor that the company is facing moving forward into the next decade. So one of the issues that I have with the company is its high cost of production moving forward into the next 3 years. This is because we can see from the C1 cost, which is the mining industry preferred measure for the cost of production. And we can see that 29Metals have one of the highest C1 cost relative to its peers at $2.12 in 2021, and it is expected to increase up to $2.02 and $2 up to $2.04 in this year actually. And we know for a fact that high inflation coming in this year is going to push up the cost of production overall for all of the company. But in terms of comparing it with its peers, I don't see how the high cost of production for 29Metals is a good sign for the company, because even if we have a very strong top line revenue, a very high cost of production will depress our margin for moving forward into the next decade, and it is not attractive for investors if we compare it with its peers. So this is one of the issues that I'm looking at, and I hope that the management of 29Metals can solve this issue by improving its production efficiency and also to achieve economic of scales, because those mines like the Golden Grove mines and the Capricorn copper mines just came online recently in 2020 and 21. Another issue that I have with 29Metals is to manage the investors' expectation on the overall value of the company. What the market is pricing in right now as of 8th of April in 2022 at $2.85 per share shows that actually the company's market share is similar to the market share of Sunfire in 2020. And this is no coincidence, because we can see clearly that the current commodity production of 29Metals at 68,000 tons of copper equivalent relative to the Sunfire copper equivalent tons of production in 2020 at 70,000. They are almost the same in terms of the size, the scale, and also the production itself. This comparability is before Sunfire acquired Matsa mine in 2021. What this implicates is that the investors are not really convinced that 29Metals can achieve higher copper production relative to Sandfire in 2020 before it acquired another mine to help propel its copper production. And this is a very persistent issue that I have with 29Metals, because yes, we have forward guidance that is going to increase its copper production by 5 kilotons in this year, but any significant increase in copper production will need to rely on the tenement project in Chile to help propel its copper production moving forward into the next 3 to 5 years. And before we can get any news or any studies coming from the tenement project or any positive news saying that, hey, the tenement project in Chile can come online now, we can start producing copper in that region. Before that happens, I think that 29Metals will be priced in just like that, at $2.80 to $3, because investors are not convinced that 29Metals can outproduce Sandfire before its acquisition of Matsa, like in terms of numbers, like 68,000 to 75,000 tons of copper equivalent commodity production. It is not going to move away or improve or increase significantly from that numbers. So before we can get any news from the tenement project, we can expect that 29Metals will be priced in at $2.80 to $3, and this is not a good sign for 29Metals or for the investors as a whole. So those issues that I've pointed out is quite a persistent one, and also quite significant in terms of whether you are starting to invest into the company. And so I would like to show like to conclude trying to compile all of the information together to see whether it is still feasible, or whether the rationality is there for you to invest into the company. From my perspective, I think that the commodity market is very strong right now because of the geopolitical risk, and also the trade, the supply and demand mismatch, and also because of high inflation. Everything seems to fit perfectly for the commodity market. And also we have a very strong copper demand moving forward into the next decade. It's not just 3 to 5 years, it's the next decade. This is going to stay persistent, it's going to stay relevant, and so 29Metals have no issue with the demand at all, and that will help help the copper price to appreciate, and hence higher top line revenue for 29Metals, and this is a good sign for the company. Notwithstanding that we are talking about a fresh new copper producer in Australia, just that has just listed in 2021, that has a very strong growth pipeline coming from the tenement project in Chile that could potentially come online in 3 to 5 years, with further studies and evaluation report coming into the investors. And so the growth is very strong. I believe that the demand side, all of the geopolitical risk, and also the company specific growth is very strong for the company, and it is a very good sign for the company. However, we have to take into account some of the key issues that I've pointed out, like the high cost of production, and also the managing investors' expectation on its copper production moving forward into the next 3 to 5 years. We know for a fact that the cost can be managed. The management have to prove to us that they can achieve economic of scale. They can achieve efficiency from its production. And how do 29Metals manage the investors' expectation? Is to continuously update investors on its tenement project in Chile, and to show some very opportunistic copper production from its existing mine, from Golden Grove mine, and also the Capricorn copper mine, to show to investors that, hey, we can continue to improve our copper production moving forward into the next 3 to 5 years, and that we can, once the report showing that the tenement project in Chile can come online, we can improve, we can increase our copper production significantly and could potentially overtake Sandfire and OZ Mineral as the 4th largest copper producer in Australia. And all of that, I think it's achievable. It will take time, 3 to 5 years, but I think it's possible for 29Metals because of its growth opportunities and its growth pipeline, and also how strong that the current juncture of the commodity market it is. I think everything seems to fit well for the 29Metals. And so if you want to start investing into the company right now, I think you should, because at $4.65 per share, from my intrinsic value relative to the current share price at $2.85 per share as of early April 2022, you can potentially gain a 63% upside benefit if you start investing right now. And so this concludes my presentation. I hope you enjoy this video. And once again, my name is Lee, and I hope you will continue to support my investment proposition video, and I hope to see you soon. Thank you.